Well, it's official. The U.S. economy is no longer #1 in the world. China has replaced it as the #1 leader. This was an inevitability. Didn't think it would happen today, but and I think the Goldman guys had done some analysis and thought that it would happen in a few years. But nevertheless, the results are in, and I kind of said tongue-in-cheek, see you later, FSA, as in Fascist States of America, or call it PSA, Puritanical States of America. Now, U.S. is a great country. I have some great friends there. I love it to bits. And my hope is that in time, with some of you may be familiar with crypto technologies like Bitcoin, that will empower the individual and also decentralize the power structures in many governments. But that's a different talk altogether, and it's not the concern of this webinar. But it's interesting and exciting to see the world changing faster than we thought. Now, in terms of the market at home here, we've got an ECB that announced it was going to not be able to accelerate the pace of its quantitative easing program, because simply the borrowing costs can't go any lower. The interest rates are already rock bottom. But the president said that they will be doing asset purchases for at least the next 2 years. So that tells me that he doesn't see the European economies getting on track for quite some time. And since these economies are pretty connected between US, UK, Europe, China, etc., that then bodes in favor of what PIMCO's Bill Gross, the fund manager of the world's largest bond fund, said when he mentioned that he didn't think interest rates would be hiked until mid-2016 at the earliest. I know most analysts have thought it would be mid-2015. That's what the Fed has telegraphed as well, but I think that's overly optimistic, because we really aren't seeing enough evidence of economies, either here at home or abroad, gaining enough traction, despite all this money printing that's gone on since since late 2008. So what does that make it? That's 6 years, just over 6 years of money printing, with these balance sheets growing increasingly in debt. We've got the U.S., UK, and Europe, which are the champion debtor countries of the world, and it's as Greenspan, the former Fed chairman, said, it's new ground. We're in absolutely new territory here, so historically speaking. So it'll be interesting to see how this plays out. It might be pretty ugly, but there are so many checks and balances to the way the world is interconnected that while there are analysts who say, yeah, this is going to have to end in a massive crash, the market does live to surprise. So we'll obviously have to see how it does play out. Massive crashes have always been preceded by enough warning signals, and this goes all the way back to the 1900s, based on my research. And in real time, since 1991, the market direction model has never missed a major sell. I mean, the last major crash we had was the one in 2010 with the flash crash, and the model went to sell signal a few days beforehand because it sensed enough trouble on the horizon. Of course, it nailed the 2008. That was obviously one of the worst crashes we've had, and we'll see what happens going forward. But right now, we're still in this uptrend. While I think there was talk about the what is it? I'm drawing this blank. What's it, Gil? The doomsday scenario. the
Hindenburg omen, is that it?
Yeah, Hindenburg. Yeah, the Hindenburg thing. I think the media, it makes great headline news, so the media likes to pounce on it whenever it does happen. It's a rare signal, and prior to 2010, it has a pretty good track record. It does before every major crash. I think it's always signaled. That doesn't mean it nails it to the day. I think within 40 days you'll get a major correction. But that said, 75% of the time it misses. You don't get that major correction. Maybe you get a minor one. It did pretty well earlier this year in September when it triggered, and that led to roughly a 10% correction in the major averages. So sometimes it is helpful, but of course 10% is not a major crash. I wouldn't count that against the model, but 75% of the time, keep in mind, it doesn't lead to a major crash. And there were times in the last few years in this QE environment where the market's just thumbed its nose right at Hindenburg and went higher almost to the day after the omen signaled. But yeah, again, it just goes to show that in this QE environment, these indicators that have a certain degree of reliability are taken out to the woodshed and shot when you've got all this money printing manipulation going on behind the scenes. And what else? Over in commodities, we've got oil, which continues to fall. Major commodities are also coming off along with the oils, and that's led people to be concerned about further deflationary conditions. Over in Europe, of course, they're worried about more deflation, because I think inflation right now is at 0.3%, and that's well under the ECB's target of just under 2%. So their hands are tied, and all they can do is asset purchases at this point to hopefully get things moving again. But again, there's no saying whether that's going to work. I mean, certainly QE hasn't worked over the last few years, and the European countries are in danger of stepping into a third recession since 2009. So things are not pretty, but in the meantime, we're going to just stick with our price-volume averages in leading stocks and see what the market delivers. Bill?
Yeah, I mean, the market's in an uptrend, but a lot of stocks aren't in uptrends. And some are. I think it remains a mixed bag. The Sunday webinar that I did on Sunday afternoon, as the futures were opening up, we covered some ideas in terms of short sales that have actually worked pretty well this week. If you look at some of the stuff, Tesla being one of them, sitting right at the 50-day moving average on Friday, and we talked about it ready to break the 50-day moving average, and it did so actually on Monday very quickly. So we broke down. Now you're underneath the 200-day moving average. So what it's doing right now, this little blipping around underneath the 200-day moving average is very normal. I'm sitting with a core position short in the stock that I took up here near 260. And for now, I would say any rallies up into the 200-day moving average should probably be looked at as shortable events. Pending a breakdown for this low, I would use this low as my near-term price target, 217.32. But then you go further down to this low in this base, which is at 177.22. So that's pretty much what I'm looking at in terms of downside targets for Tesla. And I think it's definitely going lower. We went over that last week, and I was sitting here on the 50-day moving average, and I think Dr. K and I both agreed that that's not looking so good. And Dr. K, did you end up shorting the stock around 242, 43, or not? No?
No, the thing is, I could see the odds are good, but I'm very focused on the XIV model right now, which has actually been doing very well for me. And I have enough confidence in it that I've been putting at least my whole portfolio in the signals.
Okay, so all I have to say is you didn't short Tesla.
Yeah, but I actually made more money doing the things I'm doing with XIV, and at the end of the day, it's all about performance.
Okie dokie.
But I want to tell everyone here that shorting is fantastic. I have done it before a number of times, obviously. And I guess I would say that if the short sell, some of these setups look so good, it's so tempting to give it a go. But I want to have a meaningful position if I'm going to do that. We'll see what happens going forward, because I think there are going to be some choppy waters ahead. And of course, there will be shorting opportunities as there have been in the last few months, even with this uptrend.
Yeah, I mean, what I see going on here now is you do this wedging rally into last week, which, Thanksgiving week, as I said on Sunday, everything's kind of, so nobody's going to sell. So they just drifted higher. It churns at the peak, but the interesting is that volume was actually pretty high for a half day on Friday. So I think that was sold into, and then we see the break on Monday on heavier volume, and now you're wedging back up, and I think that's because everybody's pretty much conditioned to buy the dip. So you get a little dip in here. Everybody's got to be in the market. It's allegedly a seasonally favorable period for the market, and everything is going to go gangbusters. All the banks are printing and so on, and so of course everybody's mentality is that you want to be all lathered up on the long side, and I think there's some risk here of being aggressive on the long side here, because all I know is I continue to make new highs as I forge ever closer to triple digits on the year. And I've been doing it this week mostly on the short side, and I find that perhaps somewhat telling about what the market is like, at least at a granular level, which is where trades are made. And yeah, we talked about the Amazon. Here, this is such a typical example. The thing just continues plowing higher. Finally, you get a stalling day, but it's hard to pick a top here. You could have said this was stalling here at the 200-day, and that was a top. Shorted there, you'd have been stopped out. Here, you get a reversal close near the lows of the day. Maybe that would have been it, but here you jack one more time, and that's pretty much it. So when you start to reverse and break the 200-day here, you pause briefly, and the stock is shortable right there at about 327. And we did actually talk about this in the chat room that day. Somebody brought it up, and at first I thought, well, it's too far down today because that was Monday. And in fact, I looked at the chart on Tuesday rather, and noticed that the stock was rumbling around the 200-day moving average where it was finding intraday resistance, and so I thought, yeah, actually that's a workable trade. You could short it here using the 200-day plus another % or two on the upside as a quick stop just to see how soft this thing is, and it's pretty soft. Now you're down at the 50-day. If you get a rally back up to the 200-day moving average, then that might be another point to short the stock. But I think this market's coming in. It's been acting well. The indexes just continue higher, but I think and I think you see it this way too, Dr. K, that as far as stock-by-stock basis, it's really, really, really a mixed bag, and you really have to be on top of the setups as they occur in real time. And there are some decent trades, but you have to be, I think, opportunistic and look to buy into little pullbacks. Sometimes, however, that doesn't work. I'll give you an example. Bid Auto, you had a nice pocket pivot breakout there. Looks great. It's an 8-stage base, but I think that is really a meaningless statement because, theoretically, once you get to a 3rd or 4th or 5th stage base, you're long in the tooth, and this is an 8-stage base, so it really proves de facto the uselessness of trying to apply a label in terms of something being late stage and therefore failure prone. To me, late stage is as late stage does, to kind of paraphrase Forrest Gump from that great movie. I'm sure you've all seen it. And this is once a late stage. To me, a base is late stage once it fails. When it fails, now you can talk to me about being late stage. But don't tell me beforehand that it's late stage, because I'm not going to play. I got to see what the evidence is for late stage base, which is a failure, breakout failure. And here you have the breakout. You pull back into the 10-day, 20-day moving average zone, I guess, between the two lines. You see that? And the volume dries up, which is constructive, and then you pop out, go to new highs, you reverse at new highs here at the left side peak of the cup, and boom, you're breaking. This is a short, and I think today you open up a little bit, you're reversing back to the 50-day moving average. This thing's going lower, probably heading for the 200-day moving average and undercutting this low. That's what that looks like to me. So another one I'm looking at short is this CENX that we put out as a buy here on a pocket pivot, which is, you could arguably say it's a late stages base. I mean, if you look at this big move and you set up in this base, now you're failing very rapidly. It reminds me a little bit of SunPower back in 2007, which had a big run and then it formed this jagged sort of V-shaped cup with handle and then reversed very hard and then blew apart. And you notice on the daily chart, stock's sort of hanging above the 50-day, but the way I look at it, rallies up into the 10-day, even up into the 20-day at around 27.59, I think it is, 60. Those are shortable using the lines there as your nearby stops on the upside. So that's how you'd handle that, because this is a kind of a, it's something of a late stage base in the sense that this thing has had a big move. And if things start to get ugly in the market, I think they're going to clock all of these. So X was one we looked at over the weekend. Of course, it had broken down all the way to the 200-day moving average and this low. It did not undercut this low, but it did bounce off the 200-day, which I'm guessing is the 40-week. Yeah, bounced right off the 40-week on the weekly. So it's kind of a big, ugly, 2/3 of a double bottom so far. Trying to rally. There's some news that, I don't know, buyout rumors about X, but I think it's a dog, and it's probably going lower. But I think you might get more juice out of CENX on the downside if things start to break down. So it's still in play, in terms of all we know for sure right now is the breakout failed. Potentially it is late stage, so that's what you're operating on the basis of. And the confirmation is roughly found in the breakdown through the 20-day, which also serves as resistance because you can see the green line here, it never closes above that line. So that's the sort of thing I'm looking for on the short side in something like this. Same thing goes with BITA. And so I'd look for this thing to break down. Maybe it comes down to the 200-day or maybe it just undercuts one of these lows. I don't know, but I think it's going to probably play out according to what the general market does. And if the general market starts to come in here, even on, say, a normal correction, then maybe it comes in hard or maybe not. I don't know. I still think it's a fluid situation, but it is a setup, and I'm playing stocks on the basis of their individual setups, not on what the indexes are doing. In fact, I don't really even pay attention to the indexes, to tell you the truth. I just kind of blow them off. Let's see, some other names. I think Twitter is a short. This is a classic move, and it's had a couple of these. I thought this was a shakeout to the upside, so you call it a shake-up, back up to the 20-day moving average after the gap down following earnings in late October. So you rally back to the 20-day on a bunch of news about them having the same revenue growth as Google, which I thought was an incredible fantasy, but a quaint one nevertheless. And the stock sort of treated it that way as well, with a quick little rally up to the 20-day moving average and then reversal on heavier volume. Now you're testing these lows here. You get one more rally up towards the 20-day moving average. Notice you never close above it here, although you did blip slightly above it. But that's a short sale point. The caveat in that case would be that the stock continues higher to what's really the highs of this bear flag and the 200-day moving average, all of which you can see all the moving averages are now descending and in clear downtrend, so they're looking pretty grim. And my guess is this thing is going to break out to the downside. You had the breakout yesterday, but if you turn this upside down, this little flag, bear flag, this breakout, now you pull back up into the 10-day on light volume. It's sort of the reverse. If you turn it upside down, the stock breaking out of a flag has a little pullback on light volume to the top of the flag and then takes off higher. In this case, we'd be looking for this to take off lower. So anyways, market's still bouncing around. It's just one big algo pong game. But meanwhile, you see things like this, okay? And if we look at this on a weekly chart, that's a pod breakdown. And as soon as it broke the 20-day up here, that was pretty much it. And you'll notice it never found any support at the line, closing below it each time it tried to go higher above this nice green-colored moving average. And that's been resistance all the way down. And it probably continues that way as this progresses, but I think now this is getting to a point where you're looking at a fractal head and shoulders here on the weekly that's now visible. Before we saw the fractal head and shoulders on the daily, and now you could barely make that out on the weekly up here. You see that? That's say between the 50 and the 55 level in that zone, and that's what you're seeing here basically. And now you're starting to see a larger one, which tells me this thing's probably headed lower, and probably a lot lower. So. Anyways, Facebook is probably the quality name in the social networking group, and I think that's pretty much borne out by the fact that it was able to rally above the 50-day last week, and it comes right to the top of the breakout point, which for a failed breakout type of setup, for it to do that, that's not unusual. I mean, sometimes they'll just get resistance or hit resistance right at the 50-day line or the 20-day, but then you might have a random pop, and generally associated with the market rallying as well. Get a random pop to the upside, stock test the breakout point again. Notice how it's stalled here on light volume. Of course, that was Friday after Thanksgiving. Then you pick up volume and you bust to the downside. Now you're living back below the 50-day. That is now your upside stop at 75.96. Stocks is short, in my view, using that as a quick stop and looking for a breakdown to the 200-day that would undercut this low. You'll actually see a lot of patterns. We're looking at CENX as one of them. BITA, in terms of this sort of late-stage failed base, brings the 200-day and a prior low in the base into play. That one, I think BITA is a similar situation. You see that, low of the base. So you're kind of seeing a lot of these, and I'm not sure what that means, but I'm not constructive on stocks in general. I don't think there's a lot you can buy here where you're going to make big money. That could change, and I'd welcome a change in that. But for now, where I see you're able to make big money, and sometimes some pretty quick money on the downside, or on the short side rather. Anyways, let me answer some of these insightful questions of yours. Somebody says Dr. K is jacked up here. Dr. K, are you jacked up today?
Depends on what you mean by that
You're
phrase.
always jacked up.
A whole lot of things.
It's more like, when are you not jacked up?
Yeah, I mean, I haven't had to work since 1995, so
Right. Same here. I think, no, I was 97. Anyways, anyway, just trading the markets gets my adrenaline going. I don't know if anybody noticed, on Sunday I was pretty mellow. But when I'm trading, especially if I'm making a bunch of money, I tend to get a lot more obnoxious. I don't know why that happens. I think it's just too much adrenaline coursing. No, too much adrenaline coursing through my veins. So I have no ego, Dr. K. I sold it.
Yes, one must be in a state of enlightenment.
Let's see. Does news on Gilead, Mylan to manufacture HIV drug, change SS setup, or does it help as it rallies up into the 20-week? I think the news just is news. You know, if it was really hot, the stock would have gapped out to 115, kind of like Biogen did. I think this is a short, using the 65-day or the 20-day here at a 102.86 as a stop. The closer it gets there, the better, probably. But I would look at it as just a news rally. Most of these news rallies fail. You know, everybody gets all hopped up over them, and then they just fail. But so does it help in the sense that it sets up a rally that becomes shortable? Yeah. Does it hurt if it keeps going through there on big volume? Then that's a problem. So if you're going to short it, you know where your stop is. And people, we talked about this on Monday. I was in the chat room right away on Monday to talk about this and how you might handle this. If you were shorting the stock up here around the 320 something level, 322, 23, around the 50-day, and you got short here, and then you get this break, you got hit, and the loss was negligible, which shows why you want to be more anticipatory in general, excuse me, in your short selling than trying to react to things. Because once everybody sees this break, now they want to get short. Everybody wants to get short. Nobody's talking about it up here. But once it gets in here, everybody wants to get shorted. And so this is technically a short sale point. You know, you rally here on light volume, you're stalling at the 20-day, very typical, a little bear flag. So if you went short there, right off the bat, you're down about 6, 7, 8%, which would probably be the most you'd want to lose on a short sale position in any case. And so I think that would have been a stop out for most people. And for me, if I was shorted, I probably would have watched where it was opening. I think pre-open it was around 340, and I might have tried to short some of it, looking to pick off a little bit of a drift back in and then cover the whole thing. But then you're getting tricky, and that doesn't necessarily work. If you get hit with a loss, you take it because you can make it up very quickly somewhere else, and that's generally what I try to do. So I wasn't short this overnight, and I always talk about not holding heavy short positions, sometimes no short positions, even though I'm actively campaigning on the short side. I will hold nothing overnight or very little overnight because I know how the market works, and I know that stocks can gap up against you on news, and it's kind of painful to be caught in that unless you're working with a position size that you're comfortable with if you do get hit on some news. I think a rally of 6, 7, 8% like Biogen had, that's actually a small rally on supposedly big news, and you look at it in terms of the percentages. But this got all of the biotechs, like Gilead, got caught on fire, I guess, on Monday, but not really. Just rallied up in the 65-day exponential on the 20-day, and then it reversed. And now it looks to me like it's ready to break out to the downside. So I actually right now have a starter sort of position short in the stock on this rally. If you're looking at it on the 620 chart, you get a MACD stretch up here, up near the 102 level, and as you pull back in, you're forming a little base here, and you've got a MACD cross. I'm kind of watching this now because it could break out through the highs, and if it did that, I might back off, but we'll see. It's still kind of early. Still basically in a test phase. But the idea here is that it could be layered into as you rally up towards the 20-day moving average. But I don't think that if the news were really hot, this thing should really be moving. So I'm a little bit suspicious of it as a long proposition. And thus, I think that as a short proposition, given the somewhat muted move, given the supposed great news today, I think that tells you it's a little bit vulnerable to the downside from here. Short Apple. Why would you short Apple? I don't know. I guess you could try it with the idea that this break off the peak signals a peak in the stock. Right now, Apple, everybody loves Apple, and you got to own Apple. I noticed on Fox Business the other day they're talking about buying an iPhone and buying Apple stock too, and it's such a brilliant long-term investment. When people start talking like that, like they talk about Tesla being a long-term investment, that starts to make me nervous, or at least a little bit my ears perk up for potential short sale. possibilities. And in this case, you could look at this as a breakdown, initial bout of selling into this move, and now you get this sort of wedging rally into the 10-day, and you could use the 10-day at 116.85 as a stop. But this is a kind of a tricky setup, but if we look at it on a fractal basis, let's look at this, since you're asking. This is basically what you're looking at. You got this sort of cup with handle formation on the 60-minute, and it's failed. And now the stock's kind of hovering about here. This is a 60-minute, but I've watched well, you already have a sell signal on the 5-minute 620. So I think if the market comes in, you're going to see Apple come in a big way. So, you know, take it from there. But don't fool yourself into thinking that because this is up there near highs that it's going to have a huge break and you're going to make a ton of money. Sometimes the weaker stocks are the ones where you get the nice downside breaks in them, and that's where you want to be focused on the short side, I think. If you want to try playing that, go for it. But we're really not here to provide you with personal investment advice and tell you what trades to put on. We can talk about them, but ultimately you have to decide what you're going to do. But I do, you know, all that to say is that I do see a trade there if you want to try it. But I can tell you from my own experience, I've tried these before, and they don't work so well. And meanwhile, I'm messing around with this, and I miss something else that's blown apart, you know, like I think Twitter's about to. Anyways, that's just my opinion. Has Dr. K bought any BGUs this year? Why does that even matter? And what if he did? Okay, so he bought 6 BGUs. Now what? What does that mean?
Huh. That's an odd question, because who cares what I did?
Dr. K, what kind of underwear do you wear? Do you wear Fruit of the Loom?
Yeah, really.
All right. Anyways, sorry about that. VASC is a short. What is this? Vascular Solutions. I don't know. Too thin for me. 114,000 shares. Would not play it. I see what you see, though. You're looking at a stock that has a big break off the peak, and now you get the wedging rally. Would you go short it here? I guess if you wanted to short 100 shares, that might be seen as a short sale setup because you have a 50% retracement. Now, where do you put your stop? At the highs of the day, I guess? I don't know. But that's kind of an intriguing trade. So, I don't know. Some of you guys are thinking here. I like that. And I'm going to say something else, too. In the new book, we pretty much debunked the whole idea that you should only short stocks that trade 2 or 3 million shares a day, or at least 1 million. I think it really depends on the size of your account and the size of the position. If you're going to be shorting 100, 200, 300 shares, you can do something like this that trades 114,000 shares a day. You could. Not really my cup of tea, though, but you know, I think it depends on the size of your trade. You're not going to go in there and do, you know, 50,000 shares, otherwise you're going to jack the thing 10 points, but it could be done. So anyways, G-Pro. I wouldn't touch G-Pro with a 10-foot pole here. It's looking pretty grim. What's your take on G-Pro, Dr. K? You got any words of wisdom? Is it setting up in a base? Do you think that the product is so silly and it's a fad that's gonna flame out here, or what do you see here?
Well, you know, it's got competition, and the thing is, the earnings are accelerating nicely, but you know, it's had the gap up on earnings, but then it had the gap down just a couple weeks ago. So, you know, right now it's in no man's land. There's nothing to do with the stock. It's in the basing pattern. So it's kind of pointless to try to predict the future, which doesn't even exist anyway, as Ed Sekoda likes to say. If this is a viable company, and by the way, even if it's not a viable company, all that matters is perception, as we saw in the late 90s with these dot-coms. So if the perception is positive and you get big money coming into it, it will base out and break out. It'll probably issue a pocket pivot of some sort, and we can buy it. If it doesn't have the proper perception, then it's probably just going to base and head lower. So either way, we just have to wait to see how this phase plays out.
Right, and there are no buy points in the stock right now. I mean, I think this was extended here to be a pocket pivot. This might have been, you know, a gap up pocket pivot here, but still, you're already up a bit. So there's no buy points in here. You look at it on the weekly, you're forming a base. You get some support off the lows here and here and here, but here they're selling off the highs. Here you're getting stalling off the peak. So it's sort of just in an unresolved pattern. And I would not necessarily assume that you can step in here and buy this thing here. Notice how it does hold a 65-day exponential here and here. Kind of interesting. Let's see. Palo Alto Networks. That's pulling back to the 10-day, or it did. I don't really see anything here yet. If you were tricky, you could have bought it, on the day of earnings was here, I think, and it traded down like 108 after hours, and then it turned and went higher, and you could have gotten 10% move over the next couple, 3 days, and now it's sort of backing and filling. It's sort of up there, though. It's kind of been going for a while, and so you do have to be cognizant of how extended it is. My inclination is to sell into that sharp move if you're able to buy closer to 110 or in the stock lower, and then let it set up along the 10-day and see what happens here. Let's see. What else we got here? VDSI, Vasco Data Centers. VDSI. Yeah, this is a nice little data security, rather. It's a nice little cyber security name. And stock's basically, running along the 10-day moving average. You had a continuation pocket pivot here, I believe, right here. Well, that's kind of extended. Let's see. Now, does this one? No, that doesn't qualify. This one does, however. There's a pocket pivot right there, but here's a sort of a viable gap. We got extended pretty quickly, so, but still looks grim to me. I mean, what am I saying, grim? It looks fine to me. I was just over here looking at Twitter, and my brain just flashed looking grim on Twitter. But anyways, any more questions here? Some other stuff. I mean, the market, maybe we're just waiting. It's waiting for tomorrow's jobs number. It's looking for something, some sort of signal that the Fed is going to continue with QE. But like you were saying, Dr. K, most people expect them to keep rates low through 2016. Is that right?
Yes, next 2 years at least.
So
we're looking at end of 2016 at the earliest.
The market knows that, so I don't know. If we have a strong number, they're all manufactured anyways, so I don't really pay that much attention to it. It's just a jobs number. I just watch the stocks for the most part. Splunk, let's see, did we talk about that one? Splunk, this is one I actually shorted in here using the 620 on the day after earnings when it gapped up, and it's come in nicely. And to me, once it broke the 20-day moving average, that's confirmation of the of this failure, of this reversal. And so now short rallies up into that, and the 10-day here, you can see was resistance here, but rallies up into this zone, I think, are shortable. I'm actually short the stock again. I got short in here and then covered into this, and took a profit. Now I'm just working it again on this rally, and so far it's coming in for me a little bit, so it's working. I'm not going to get all excited quite yet, but working that way. Illumina, yeah, I don't know. This one of these big slow things, trying to go higher. There's nothing here either way. You can't really say you can short it or you'd want to short it here, and I don't even know if I'd go long it. It's somewhat been out of there for a while. UA, that one looks like it's failing, but notice how it hasn't busted through the 20-day moving average. So that's one, late stage base. If we look at this, that's been going for a while. You can see that. So just watching the market here. If I seem like I get distracted from time to time, it's because I am. So watching Gilead closely here and watching Splunk, which I put out today. And of course Twitter, which I've been short for a while. Does VRX have characteristics of a pod? Well, it's not that deep, but it's a sort of a big ugly, base, so I would just be watching this. A failure through the 20-day would tell you've got some problems. Aren't they being bought out, though, Dr. K? Wasn't there something about that?
On VRX?
Yeah, Valiant.
I'm not sure. I haven't checked. I'll just check real fast. But it doesn't look like it from the chart action.
Somebody who got bought out, Allergan or someone. Wasn't somebody going to buy them out, or they were going to buy anyways? I don't know. Was it Activist? Activist. I love that name.
There was a company that got bought out just a few days ago. I took it off my list. I don't remember what it was, but that was a clear buyout. The clue is when it gaps up and then it trades in a very tight trading range on that gap up, it's most likely a buyout.
Right. But I don't know if it's a pod, and it really doesn't matter. So Allergan was to be bought by VRX. ACT ended up buying it. Yeah, okay, that's what happened. But I don't, VRX, is it a short? Just because you can label something a pod doesn't mean it's going down, okay? You need to see some breakdown. So all you know right now is you've had a nice move on big volume and you're holding along the 10-day on light volume, so that looks fine. So there's no reason really to go after it on the short side or to assume that it's a short yet until it confirms on the downside. Anyways, Dr. K, Avenir was bought out a couple of days ago.
Yeah, that's it. That's the one.
That's the one that got bought out, yeah. It's been acting okay. I think we put out some pocket pivot alerts on it somewhere in here. So market's just kind of bouncing around. Oh, here's one for you, Dr. K. You ready?
Yep.
Here, actually, I'm going to says when you set a stop, e.g. the 10-day moving average, do sell or cover when it hits the stop intraday, or do you wait until EOD to sell? How do you handle stops operationally?
Yeah, no, I don't wait till the end of the day. That's my style. If it breaks the intraday low of the prior day, then I'm out of there. I tend to be pretty tight on my stops because these losses can get out of hand pretty quickly, and sometimes you'll get a stock that doesn't just sell off 3 or 4%, but somehow manage to close down 10% on the day, and it becomes very difficult to sell at that level. So you can get psychologically stuck in a stock that does that, and by adhering to a very strict rule of selling when it goes below the prior day's intraday low, or rather I should say when it violates the moving average on an intraday basis, you run much less risk in getting psychologically stuck in any position.
Okay, let's see. Somebody else says, interesting pocket pivot on Avenir in September. Here? Yeah, there's a pocket pivot there, and then it gapped out. You had to hold it through earnings, I think, though. Let's see here. BABA. Nobody's asked about BABA, interestingly. It's trying to set up in a flag, get some support off the lows. You can see what it did here is it came within 5% of the breakout point through this cup, this IPO U-turn thing, and so got excuse me, within 5% of the breakout point, and so you got some buying coming in there on a heavy volume gap down. Now you've rallied up into the 10-day, and volume is drawing up, and you're holding along the 20-day. This might be a spot where the stock could be bought, but I think it's still working its way through. At best a new base, and at worst it could break down and retest the top of the base. I think it sort of depends on what the market's doing. I thought, a lot of hedge funds bought this in the last quarter, and so they're big in it. Right now, maybe if the market rallies, they try and push this higher to benefit themselves. I guess I don't know, but it's getting hit with some selling. So somebody's also selling it too, and I think there's a big lockup coming up soon. Anyways. True had pocket pivots. There's a pocket pivot here, so it's trying to come up. That's what it looks like on a weekly chart, a big double bottom. So theoretically, would become viable on the breakout through the peak, the middle of the peak. But that's a little bit sloppy for my taste. Pretty deep base, kind of ugly. We were talking about it in the chat room along here, and as when it undercuts the lows and sets up and comes higher, you get, I don't know, you could call it a shakeout plus 1.5 or something. I don't know, but nothing I would buy now. It's too extended. Let's see. Cyber Arc, the other good cybersecurity name in this market. So you got Vasco Data is a good one, BDSI, you've got Palo Alto Networks, you got this one. It's the #1 group right now. No surprise. And this is basically holding in a flag. Dr. K, what's your take on this? Is this acting okay following the Bible gap up of mid-November?
Yeah, it's to me it doesn't look like it's doing anything particularly onerous. So it's just it's finding its feet here. And my guess is that given the current price momentum in the nature of the business and its place in its respective group, I think the base should complete, and we'll probably get another pocket pivot somewhere in here.
Right. You notice also you get the pullback on Friday right to the 20-day moving average, and it holds roughly. It goes a little bit through it on not really heavy volume, but a pickup in volume. And then it's also testing the intraday low here, which is 38.38. So it gets close. This low is 38.96. So it comes within a buyable range where you could have bought it on the pullback using that low as your guide for a stop. So that really lowers your risk, although you do have to sort of close your eyes a little bit here and just buy the thing. And then you get a nice pop. And I had some overnight. I just sold it this morning. So nice pop off the 20-day. I don't think it's heading anywhere anytime soon. Like I said, I'm a little bit wary of the market in general. So being aggressive on the long side is unless you're at the right point of impact on something, I think it's riskier. Whereas I'm finding the short side easier to play. So I generally just go from what kind of love am I getting, where am I getting it from, and in this case, I'm getting it mostly from the short side. So that naturally leads me more to the short side by default. Let's see, any other. Silica, we've been talking about this one for a long time, and of course we started talking about it in here on the webinars and in here on this rally, and finally you get the gap down, and now you're in a little bear flag. There's nowhere you can short it. I would keep an eye on this. So you are coming down into this base. So I think if you short the stock up here, even if you jumped on it, on the shortable gap down through support here, and you could have gotten on this right away, and it never got above the 38.10 high of the day. You had a 25% profit by the end of the day, and it's sort of, what more do you want? So I think at this point, if you're trying to come in short, maybe you get some more downside that undercuts this low here at 24.28, or maybe you get a sharp rally back to the upside. I think at this point, I'd just prefer to hit this on a rally or watch a rally and see how it develops rather than try to be a hero. And, well, you're really not even a hero. You're just getting greedy because you're reacting to this if you haven't been short the name already. If you're working it and you're campaigning it and you have a cushion in, as I like to say now, not the position but the campaign, and that's how I look at it. If I'm working a stock on the short side and I'm building profits as I'm trading that stock, those profits represent a cushion to me in the campaign, not necessarily a position, because I won't simply hold a position in most cases. Somebody asked short Yelp. Well, you can look at this as being, if you look at this as big head and shoulders, we already talked about this previously many times, and it has had a big move. And if you think about it, there is more potential downside. And when you think about their business, I don't really see it as being all that exciting in terms of something that deserves to be valued at 1,000 times earnings. What are these guys valued at right now, anyways? Only 134 times forward estimates. So, but they're making a nice fat 7 cents a share per quarter. I mean, what could be more compelling than that? The thing here is you'd have to run this tight. It looks like a bear flag that's ready to break out to me, and you can see that so far it's been following the 20-day on the way down for the most part. And actually, this is very common. And the latest studies I've done that are in the new book, included in the new book, they show that this is a very reliable moving average on the downside. It even to some extent follows the 10-day moving average, and I bet you it never violates the 10-day moving average on the upside either. But it generally will find resistance around the 20-day, and it continues to do that. So rallies into the 20-day have been shortable. And if you're going to short this, you probably want to keep a tight stop, the same way you would if you were trying to buy this. If you turn it upside down, you're trying to buy this. I think you want to use a tight stop around the 10-day moving average. But there is potential for more downside. And you do see another fractal head and shoulders that's got a sort of a descending neckline along the lows here. So, maybe there's potential there. Let's see if I can do this. Yeah, there we go. Draw the neckline there. Isn't that pretty? Okay, let's get rid of that. Market coming off a little bit. I think you're going to come in by the close, so I think you'll be down a little more than this. Maybe you'll go through the lows of the day. I don't know. Tomorrow's job number. Dr. Ted, do you think there's going to be anything significant there, or do you think it'll be a non-event?
It's been a non-event for quite some time. If it's strong, then the market sees that as less QE, and if it's weak, then more QE, and the market just wants to go higher regardless of what the report dictates. So I expect that it's not going to in any way be contributory toward derailing the market or putting it into a nasty correction. The nasty correction will come probably from the idea that QE is going to be turned off, or it's going to be coming, the rates will get hiked sooner than later. I don't think the Fed's going to be doing those things, so the sell-off could come then from something international. You know, maybe Europe slips into a third recession, and there's talk that this QE is not working. Yeah, any of those scenarios can play out, but no point in talking about it until it happens.
Right. And I don't really alter my strategies based on an outlook as to how the market's going to react to a jobs number. I just play my trades as they lie. Kind of like in golf, you know, wherever the ball lies, that's how you play it. So play it as it lies. Let's see, any more insightful and brilliant questions for us? Taser, kind of an erratic stock, but the trick here is buying it on the pullbacks and then selling it to the rallies. Getting some good news, but I think it's getting a little bit long in the tooth here, so I wouldn't be chasing it. Let's see. LinkedIn is hanging along the 50-day. I think this is a big pod, okay? And you've got this other cup and handle type thing forming here. And to me, this looks a little bit jagged and V-shaped. And what I would be watching for is a failure here. So if you consider this day to be the breakout, you may already have the failure in the sense that you've broken through the 20-day moving average. And so this little rally today into the 20-day moving average and the 10-day, which is coming down on top of the 20-day, as you can see on the chart, and it's stalling on light bottom. This looks vulnerable to downside to me from here. So I would almost look at this as shortable with using the 20-day as a tight stop. And the premise here is that you are in a big pod that is showing a late-stage little cup with handle that's not so well formed, that's beginning to fail on the breakout. And if you think about it, if this is a breakout attempt, it's failed on that attempt actually, but it could also be building a handle in here. But now you're starting to get some weakness down into the 50-day and the 20-day. Underneath the 20-day, that becomes your upside reference point for resistance and hence a stop. DGLY more interesting than Taser, someone says. I guess. I mean, they're moving on news, so you know, if you want to go after these things, you have to kind of be buying it probably in here. If you want to go chase these things now, do so at your own risk. That's something I would do. It might go higher, they might not, but I don't need to trade that way to make a lot of money. So let's see.
It looks seductive on the chart because it had a huge move, and my experience has been it usually doesn't do it a second time. I mean, right now, if you're in this, I would keep your stops pretty damn tight because it's going to be volatile.
Well, remember this one.
If you actually made money the second time around, you know, don't look the gift horse in the mouth.
Right, exactly. But remember this one, Darts K Tech Mirror. This one is going nuts because of the Ebola thing, and they have their move on the news, and it's a big deal, and then they blow up. You know, the other one like that, I remember.
I think the Ebola thing's going to be like it was in the early '90s. Ebola made headline news in the early '90s, and then it just kind of went away.
Right.
And probably the same thing's going to happen here.
Yeah, probably. I mean, that is what's happening already. It seems like, anyways. Okay. Netflix.
Yeah.
Netflix is rallying to the 10-day. I think this is worth a shot. It's kind of to the top of this gap here on this day right here. So you're at the top of the gap roughly, finding resistance. Maybe it's shortable here using the high of the day, but you are late to the party. The place to get it on the short side, to hit it on the short side, was right here at the 20-day moving average, and you notice how it followed that pretty religiously, pulling into it 1, 2, 3 times before it blew apart. So you had 3 shots to short this thing, each time at a lower point along the 20-day, and now you're getting a little bounce. I think it's going to at least undercut this low, which on the weekly chart, look how weird this looks. What's going on here? No, that's not the weekly chart. What is it? That's 5 minute. That's the, let's go to the weekly. Here we go. Yeah, there we go. I mean, to me, that could go a lot lower. And it's starting to look like a left shoulder, a big head, and a right shoulder. So now you've got a neckline here. And I think you're just looking for rallies on this thing to short. It looks to me like it's heading lower. But you can see, even in the midst of an index rally, and a relatively smooth one, I would say, you're still seeing a lot of bad action among leading stocks and reversals and breakdowns and whatnot. And I think that's telling you a lot. Where's the strength? I guess you can buy airlines. Airlines trying to go higher. They tend to be inchworm stocks, and then they inch higher, and then they break down like this, like Southeast did. And then, of course, it takes off and makes new highs. Now it's enticing everybody with this gap up. Dr. K, you don't see this as a viable gap up if you were adjusting for the volume, do you? For a short day there?
Yeah, I mean, the volume was not even, wasn't even above average, so that really wouldn't qualify.
Yeah. What about, let's just pick a big, boring airline. Delta Airlines, it looks the same. They're all rallying because of the declining price of oil, which I guess is good for them. Not so good for the rails, though they all got hit, but notice how UNP comes right back up. That would have been a nice trade if you could have caught that off the 50-day. If you had the guts to step in the way here and catch a falling knife. But to me, that's not really my investment methodology of choice. Given a choice. SSYS. I wish Obama would go POS. I'm not sure what that means. Glad the MDM caught the majority of this recent move. Glad any reversion to the mean parameters did not supersede the trend. Me too. I'm really glad that didn't supersede the trend, Dr. K. Stratasys is a short, and it's been a short for a while. I think we looked at this one over the weekend on the Sunday stock hunting webinar, and I pointed out you're in a fractal head and shoulders here, which you notice you had a head and shoulders here, and you had a nice breakdown that got really going through the neckline in March when the market corrected sharply. Then it bottomed, has been rallying and forming another fractal head and shoulders formation. Here's the neckline, and it's breaking down, and we talked about it on Sunday, which would have been looking at the chart here, and that was pretty quick to the downside. I tried to short this on Monday, couldn't get a borrow. I know, I should use options, but I don't really care to go there. Thank you very much. I can find stocks to short, but, I hate it when something, I can't borrow something and then you see it just blow apart in down 10% 4 days. Let's see, any other questions? I think we're getting to the end of this. So, it's a mixed bag. There's some things that look shortable. I don't see anything. Doctor, do you see anything that you want to buy right here, right now on the long side?
Nothing.
Yeah, same
but,
here.
We're going to run out of screens, and maybe there's going to be a stock or two that pokes its head up and issues a pocket pivot later today, and we'll of course notify members if that stock qualifies.
Yeah.
But it's been a weak rally, and it hasn't really haven't been a whole lot of leaders that have materialized in this bounce,
right,
which of course makes the bounce suspect, but it's got the QE tailwinds on its side, so it becomes a bifurcated market where the timing, the market timing can work and be profitable. Like I said, the XIV has been working very well, but it also is profitable on a stock-by-stock basis, because if you look under the hood, not all is well, and there are a number of shorting opportunities even in this bounce.
Let's see. Somebody says Interactive Brokers has 1 million shares of SSYS available. Maybe I need to switch brokers, but sometimes they don't have borrows on certain stocks. Anyways, a couple of things are coming in here now that I asked. CRM, to me this is another failure, a late stage failure, and so you're bumping up into the 50-day here. You see that? That's a short, using the 50-day moving average as your tight stop, or the high of the day. You could use the high of the day if you want to. Let me see. Let's take a look at this real quick on the 620. So that's what you look like right now. It's really kind of nondescript so far this morning. Still morning here, by the way. And let's see. I don't know. We're waiting for something to happen, but it sort of tried to run up above the 50-day and pull back in, and not really going anywhere right now. This may fail. But I think, here you're under the 50. You could use that as a stop if you wanted to short it here. The only risk there is you get another rally up to the 20-day, which I would use. If I saw a rally from here into the 20-day that looked roughly this sort of volume, this light volume here, I might hit it right there, because you have that's your ultimate upside stop on the position or on the short position if you went in there. NLNK as a voodoo, new link. You're not down to the 10-day, but I'm not going to buy this big ugly pattern. I'm not really, no. Eyes, well, eyes just, this is why you don't buy on the first day of trading, and it just came all the way in. So if you bought it on the first day of trading or you bought it anywhere in here, you're a moron, because there's no buy points. And you're basically getting all excited about the greed factor here. Market's starting to come off a little more. So like I said, I think we're going to close further down on the day. And maybe hopefully we'll blow up and all my shorts will score big and I can cover half of them and sit for tomorrow. Anyways, but the market never does what I want. Illumina, I already talked about. Nothing there. I mean, you could try and short it here, but there's no justification for doing so just yet. Wait for it to break down. I already talked about breakdowns through the 20-day moving average. So, and that's all she wrote, you guys. Thanks for showing up. I don't know, if I feel inspired to do another stock hunting webinar on Sunday, maybe I'll do one, a quick one, if I have some good ideas. I think if I see anything really compelling in my Saturday research, I will call a webinar on Sunday afternoon sometime. And it may be short if I don't have a lot of time or whatnot, but if I see anything compelling. Now we're coming off now down 14 on the Dow. I'm telling you, we're going lower. This market's toast. At least good for a little correction here. So, but Dr. K, the MDM has done well. When did the buy signal hit?
Oh, it was some weeks ago, close to the low of the bounce.
Near the, like right here, like on the 20th or something. The 19th.
Well, I think actually it was we have to just check. I think it was the 17th, and then it went to a one-day sell signal because it sensed that the market would pull back. It did for a day, and then gapped up, and it went back to that buy signal. So it's very quick on the trigger when it needed to be.
Yeah, no, that's been a great signal. I'm probably one of the best of the year. And I think it's funny because right around here you got some email from a guy who's canceling his subscription because the MDM doesn't work. And, of course, it then has its best run of the year. But isn't that the way?
Isn't that the way? That's like when O'Neill was going to throw in the towel on the market in October of 1999. He was disgusted.
On the 23rd, right. I mean, that's in the first book. I talk about that from my diary. This market is through. And then on the 27th, just a few days later, 4 days later, we're all loading up on stocks, and that was probably the most beautiful
6 months.
It was actually 2 months. The next 2 months were, just to the end of the year.
That was the strongest, one of the strongest rallies we've had ever. And then, and of course, the first quarter of 2000, the next year at 2000 and. What are we talking? Yeah, year 2000. It was great till about mid-March.
Yeah,
especially
there was another move. Yeah, and you kept on going. So, anyways, that's all we got, you guys. Thanks for showing up. We'll catch you next week or Sunday, depending on how things lay out. Have a good one. Take care.
So long, everyone.